All right, Dan Basse now with AgResource Company. Dan, really trying to navigate things right now as Russia invades Ukraine, commodity prices responding. We saw corn and wheat soar. It's not like we're running out of commodities here. So why are we seeing this fear-based interest into the market?
Well, Tyne, it's really a realignment of world trade. What we don't know about, of course, is the sanctions. And, the Russians have also threatened that if another country were to, let's say, navally blockade the Bosphorus, which is the feeder of all the grain coming down, that they would take actions against that country. So there's a lot we don't know yet. But when you think about 31% of world wheat trade being domiciled in Ukraine and Russia, 30% of world corn trade, and then 31 or barley trade, excuse me, and then somewhere around 29% of sun oil trade. It's a really big deal. And so, the U.S. farmer's prominence has really stepped forward today regarding his position to feed the world. And the Chicago Board of Trade is reflecting that with new rally highs, at least for this advance. But if we looked at China, new record high last night in corn and soy meal. Palm oil has shot up to new record highs. So all of this is occurring at a time when the world is already looking at tight stocks, and this just exacerbates it.
Yeah. So what is the worst case scenario, Dan, that you would think would continue to fuel these commodity markets?
So if we think about the Ukraine and Russia, let's think that this is an extended conflict. Let's say this isn't over in a week. Let's say this isn't over in months and skirmishes, and the Ukrainians push back and the Ukrainians don't get their corn crop planted or their sunseed crop planted or their barley crop planted. Those are the three principal crops that you would look at. And then the world is banning trade from Russia. This would be the worst case scenario in a world where stock use ratio of the major exporters are sitting at record lows.
So what would be best case then? And how much risk then do you think would be in these markets at this point?
So the best case scenario would be, let's say that the Russians have gone in, let's say in a matter of a week, they kind of tidy things up, and the Ukrainians say, okay, we've done this before. It's only some 20 years ago that you were, of course, our leaders, and we'll kind of accept you for now. But I think there will still be these skirmishes, but that would be the best case. And then at that point, the Russians may come back and say, okay, to get back our customers in the world, we're really going to drop our corn, wheat, soy prices such that we buy back demand. That would have a very big impact on the market. So there's a lot of geopolitical back and forth here that we have yet to figure out. We'll try to get it right over the next 3 to 4 weeks. But for now, the Board of Trade is shooting first and asking question later with this big rally that we've had overnight.
Well, at the same time, Dan, we have the Ag Outlook Forum, and it seems like the world is changing as we speak, as this Outlook Forum is coming out. But let's just talk about the overall supply and demand picture. USDA did acknowledge that we will see some soybean demand come to the U.S. based on the troubles in South America. But is there anything else on the supply and demand scenario really that surprised you out of this Outlook Forum this morning?
I was surprised that USDA wasn't a little more aggressive on exports than where they were. And then they also used a record large corn yield. Now, the trend line in corn is still something the baseline gave us before, but back-to-back record corn yields are historically unusual following hybrid seed corn. So we'll see if Mother Nature is that kind, but I understand their methodology in getting there. But as we look at South American crop production, they utilize their February numbers. We believe crops in South America still have a ways to drop relative to USDA. So they probably will be raising their demand components for new crop even a little more, both on crush and exports, and of course on corn, based on an Argentinian shortfall.
Well, with the markets, there's always some uncertainty, but now with the heightened uncertainty with the situation that we're seeing, is there any way to incorporate that into the forecasts right now?
It's very, very difficult. Volatility is the word we are going to have to get used to as an agricultural producer. And so this is volatility we've not seen going back to the 70s. And so we're going to have soybeans that can be limit up on Monday and limit down by Friday. And that's kind of the markets that we have. So when we start blending in here uncertain U.S. weather, because yield will be so important in the upcoming growing season, this market's going to be on tether hooks both ways. So I want to prepare every U.S. farmer for volatility. I don't think the markets are going to have a one and done and a crash and burn until we really have an understanding of what's going on in the Black Sea. The only thing that would bother me a little bit, just to be clear geopolitically, is if China now got the green light to go taking over Taiwan. That is a big factor that we just don't know, but it looks like Putin has had his way with Ukraine. Xi has got to be wondering, can I have my way with Taiwan?
Yeah, something we're definitely watching. And then also another factor we're watching the acreage debate, USDA, really right now thinking that growers are going to plant more corn, less soybeans. But a lot of analysts that I've talked to, Dan, including yourself, with the run up we've seen in soybean prices, it seems like soybean is buying acres right now. So do you agree with these numbers that USDA put out this morning?
Listen, historically, when USDA comes out with their outlook estimates, they're relatively good. And I think you and I could debate maybe a million acres or a half million acres less of corn, maybe a half or a million acres more of soybeans. But at 88 million acres, I'm not going to argue substantially. So we're getting close to the record highs. And for now, if you look at corn margins with the rally today of 35 cents in Chicago, corn is still a more profitable crop than soybeans, even at $15 November. So when you stand back from it, there is some understanding, though fertilizer prices are not going to be coming down. The Russians are unlikely to be large exporters of fertilizers for the foreseeable future. So that's something that worries us in terms of corn acres, not only this year, but then again for the South American planting season forthcoming.
So when you look at acreage combined, do you think we have record acres this year, considering what commodity prices are doing right now?
We think on corn and soybeans combined, we'll struggle to get over 181 million acres. And those are the two crops we really need to look at. There's this problem in the United States that we, including CRP and hayland, are just running out of acres to be available. We call it peak farmland. Now we can do our best to pull in every ditch bottom that's out there to get planted, but on a longer term standpoint, it's got to be the northern hemisphere. And boy, we need record South American crops. That safrinha corn crop in Brazil as we get to April, May, and their pollination is going to be so important.
Okay, so what do you want to leave producers with, Dan? You look at wheat up 50 cents, corn up 30 cents, soybeans not as much as they were, but still up, double digits. There's so much going on right now as farmers are trying to figure out, do I hold, do I sell? I mean, just so much uncertainty. What do you want farmers to know, Dan?
So I want them to take an exhale for the moment and just kind of breathe normally. And then I want them to look at their revenue insurance price, which will be calculated as of Monday. And that will be a baseline that will give you comfort to the downside. We're hoping that revenue insurance for corn and soybeans in particular will be record high. So, participate in that probably to the fullest degree. Then I want to look at maybe marketing strategies like buying puts or something that give you some opportunity to still command the upside, because sometimes in the farming business, we need to maximize profits. And this appears, as I said, one of those years where the American farmer's profile has just taken a big leap on the world stage. We need to feed the world. And with that, I believe we need to protect our downside. But through revenue insurance and maybe some put options, I want to make sure that we don't limit our upside, because it is that kind of special time frame for the American farmer.
Dan, have you ever seen anything like this when it comes to the markets?
Well, I studied some of this when I go back and think about the collective farming system in Russia back when it collapsed in the 70s and they came forward with their gold bars. That's the closest I can find to where we are today. And then American farmers, really leaped into prominence during that time frame. Now, remember back then, soybeans rallied almost to the teens, and back in the 70s, that was like seen as unbelievable. The same in corn, making it to $4 and wheat up close to $9. So if there was a U.S. weather problem this year, I don't know how high is high, but at the same point, we as farmers have to manage our risk and manage profitability. And so I'm trying to find marketing tools that will allow us to do that without limiting our upside risk, because if we do have a U.S. weather problem, boy, again, these markets are going to stay very heated. This is not a one and done.